There's a saying, if you have one buyer, you have no buyer. And so in that situation, I kind of gave all the leverage to the buyer I ended up selling to. On the second acquisition, I call that one like kind of landing the plane in the Hudson River, figuring out who my potential buyers were from the beginning of the startup, mapping them out, building relationships long ways in advance. But seriously, if anyone's listening to this right now, I started as an LLC and then I read an article that said like the QSBS tax exemption might be going away. So I literally incorporated from an LLC to a C Corp in like 30 days or something in December, 7 years later. I ended up benefiting from it.
Yeah, it could be millions of dollars of difference, if not hundreds of thousands of millions of dollars of difference. And if you don't live in California, it's even better. Welcome to Turpentine Finance, a podcast where we talk with top founders and finance leaders about what it takes to architect success. Our guests speak candidly about big business inflections, market curveballs, and how they approach decision-making so that you have the tactics and mental models for when the pressure is on. I'm your host, Sasha Orloff, founder, CEO, and self-professed finance nerd. You ready? Let's dive in. Welcome to the show. So my guest today, Andrew, knows a thing or two about starting and selling companies. He started business apps, which grew to 10 million of ARR, and then he sold it to ESW Capital. He then founded Altcoin, which was acquired in 2019 by global investment firm Bank to the Future. So kind of 2 for 2, and then go into 500 startups. Then you were the CRO of Spiff, which was also acquired. And so then you decide to start a company called Acquire.com. What an easy, obvious name. I love it. And Acquire.com has helped hundreds of startups get acquired and facilitated 500 million in closed deals with a goal to build the world's most founder-friendly startup acquisition marketplace. So turn founder journeys into success stories. I love it. We're going to dive into some key lessons that you learned on your journey. If you decide to sell, how to get the right price. So I'm excited for this one because I also am a startup founder along the way. So Andrew, welcome to the show.
Thanks for having me, Sasha.
Cool. All right, let's just dive right in. What are good reasons to sell a company and what are not good reasons to sell a company?
Oh, hitting with a good question right off the bat. It's a really personal question. I see a lot of different reasons. If you have a great business, sometimes you just want to cash in your chips. Sometimes you can be burnt out. You could want to move on to something else. A lot of the times on Acquire, we actually see people building other companies. They have to sell the one that's not growing as fast. Those are the top two. But again, it could be a number of different reasons. Some are extremely personal. Maybe, a new life event happened and you need to sell for those reasons. It could be worth more in the hands of another buyer. So those are some common reasons. And then some reasons not to sell your startup. I think if you have a lot of gas left in the tank and you can see yourself continuing to run the company, you're having fun, that's a great reason not to sell. Or maybe it's just not in good condition. Maybe it's losing money. Maybe there's a lot of things left to fix. Maybe you just launched it and you're not going to get a lot of interest for that right off the bat. So I think what I'm getting towards is, when you sell the business, it's typically a very personal reason. And so that's going to vary from person to person. And then reasons not to sell the company usually have to do with performance or age of the business.
Nice. How did you kind of take some of the lessons from your own founding journey into starting this? Like I'm assuming it's not a nonprofit. It's a for-profit. Like you're not here just to kind of help people. Like this is a real business. Tell us a little bit more about that.
Yeah, definitely. So to give a little bit of context to that, before Acquire, I had built a SaaS company for about 8 years. I bootstrapped the business to about 10 million in recurring revenue. By the time I was done building it, I was pretty burnt out. I was gassed. But during that journey, I spent quite a bit of time reaching out to strategic buyers, to financial buyers. When I finally got an offer from a financial buyer, a private equity firm, it felt like it just kind of came out of nowhere. I didn't know what I was doing. I didn't have the right support in my corner. I thought, I wish this process was a lot easier. Why did it take so much time to find the buyer? What if there was a place where all the buyers just hung out and I could easily meet them and be able to get the advisory and support I need to close the deal? So I think just going through that process on my own just kind of opened my eyes. There's a big problem here. And then when we closed too, I remember getting, a few texts from friends just saying like, how'd you sell the business? How'd you find the buyer? How can we, do something similar? How do I sell my business? And I thought that was interesting because I thought I was the only one who didn't know about acquisitions. And that's interesting to me because there's so many books on, sales, marketing, fundraise, but really nothing for the exit, which is arguably the most important part of the founder's journey, in my opinion.
Totally. This is the meaningful return on investment comes from the acquisition process. So as you went through, like, what were some of the things that you would go back and tell, Andrew in the first acquisition and Andrew in the second acquisition?
Definitely. For the first one, I would say running a more competitive process. For the first acquisition, I just had a buyer approach. I sent a few pieces of information they had requested to figure out what they would pay for the business. I got that and I said, okay, let's sell the business. Going back, I probably would have gotten the offer, reached out to a few other buyers and let them know, hey, I'm starting a conversation. I haven't signed the letter of intent. Would you be interested in learning more? Are you interested in having a conversation just to get more potential offers in the door so I can negotiate up a bit? And the second part would be definitely negotiating up. I think I was a little scared to do so. So I think because you don't want to lose the deal, like I didn't. So just having someone in my corner to help, like, push me to do that or tell me how or what's a way to do that without scaring off the buyer. Those are the top two. On the second acquisition, I call that one like kind of landing the plane in the Hudson River. There's a pretty good backstory to that startup, but it wasn't as successful as the first company. So I think probably the same thing. Probably, figuring out who my potential buyers were from the beginning of the startup, mapping them out, building relationships long ways in advance. So when I did need to sell, I had more of those relationships in my pocket.
So in the first one, how did the offer kind of come about?
I remember reading an article on TechCrunch, and it was a subsidiary of ESW. So ESW Capital is a multi-billion-dollar private equity firm, and they had a subsidiary called Think3, and it was this TechCrunch article like they just raised $1 billion to buy SaaS companies. I remember just going to the website, filling out a form, and someone from their team called me who was an investment banker at ESW. He had some questions around, do we have a P&L? Do we have customer cohorts to check retention, customer concentration, and sent that out. It was a very fast process. It was within probably 60 days total from initial reach out to close.
Huh. And did you use a banker? Did you just use a lawyer and negotiate yourself?
Yeah, just a lawyer. The negotiation was pretty good. I think I did an okay job on that. But yeah, it was just me. But going back, I would definitely have had an advisor or a banker in my corner.
Yeah. Why? What do you think would have changed had you engaged a banker, had one handy, or even knew one back then?
Yeah, I think getting more buyers to the table. Again, there's a saying, if you have one buyer, you have no buyer. And so in that situation, I kind of gave all the leverage to the buyer I ended up selling to. So just having like one or two additional offers, I think could have been significant.
Were you able to talk them up from the preliminary offer? I mean, I guess you're going up against people who are professional negotiators along the way. You, as founders, we kind of are a little bit. We have to some degree in between sales and negotiation. Were you? Did they make an offer and did you try and negotiate it up? And if so, what did you do that made it work, or what do you wish you would have done?
Yeah, I remember I did. I think every founder does this where, you get the initial price and you go, my business is worth like 10 times that. Because, I was always told annual recurring revenue times 10, that's probably what your business is worth. Unfortunately, that's not what I sold for. We did sell for a pretty good amount. I'm very happy with the exit. But I remember pushing back and saying like, hey, can we get the valuation up to this amount so the multiple is a little higher? Weren't able to do that. We were able to increase it a little bit. So I was like, oh man, like maybe like the terms. And so we had 2 million cash on hand. So I asked them to buy the cash at a 1x multiple. And then I asked for a stock purchase as well. And the reason for that is there's something called QSBS. And so we benefited on the first 10 million of acquisition. We didn't have to pay any federal taxes. So I couldn't push the initial valuation up too much with them. I tried, but they were very flexible on the terms, and that ended up, I think, working out pretty well.
What do you mean terms, like length of earnout or?
No, so it was all cash at close. So there was no earnout. This is why I, wanted to potentially sell to them. It was all cash at close. There was a quick transition period for me. I was out of the business within 90 days after closing. And then the terms was I negotiated a stock purchase instead of an asset sale. So that can be huge because, instead of paying income tax on your acquisition, you're paying capital gains taxes. And there's something that we benefited from called QSBS. And that enabled us to pay zero federal taxes up to the first 10 million. So that saved us, gosh, like 4 or 5 million in taxes. And then we negotiated them to buy the cash in the business at a 1x multiple as well. So we didn't have to pay income tax if that was dividended back to shareholders.
Right. Can you, so for people in the audience, can you just give a quick summary of what QSBS means?
It's qualified small business stock. And essentially, it has some really restrictive rules around it where if you have held the stock for more than 5 years, there's a bunch of terms. So Google it. If you're listening to this now, Google it. And basically, if you sell for over $10 million, whatever stock you own in the business, you don't have to pay the typical 20 to 30% capital gains taxes.
And a lot of this was meant to help stimulate investment in the private markets, I think, from the federal government. Is that right? Yeah.
Yeah, it benefits angel investors a lot. So if you angel invest and you get less than $10 million from an angel investment, you can save taxes and then invest that into another business.
And is this specific to C corporations or is it all legal entities?
Good point. It's just C corps, to my knowledge. C corps, not LLCs. So if you're an LLC, you don't qualify. But seriously, if anyone's listening to this right now, because I remember when I, was growing business apps, I started as an LLC and then I read an article that said like the QSBS tax exemption might be going away or something like that. So I literally incorporated from an LLC to a C corp in like 30 days or something in December because I thought this tax hole was going to close potentially. And then 5 years later, I ended up, 6 or 7 years later, I ended up benefiting from it. So if you, aren't familiar with QSBS and you're an LLC or something like that, reincorporate into a C corp because it might, pay off later down the road.
Yeah, it could be millions of dollars of difference, if not hundreds of thousands of millions of dollars of difference. And if you don't live in California, it's even better.
Yep, that's true because you don't pay, state tax.
A lot of state tax, a lot of states also recognize QSBS. Not California, not California, unfortunately. All right, and what about the second deal? Was that something you were looking to sell? Somebody approach you? How did that come about?
Yeah, definitely. So that business, it didn't really work out. And I'll tell you why. So we were building a decentralized like Coinbase where there's no like central point of failure. And to launch that type of exchange or marketplace, you have to be a broker dealer. We'd have to register as a money transmitter license. And then the big shot to us was at the time, Ethereum tokens were deemed as, what are they called? This was a while ago. Not a security, utility token. They were deemed as a utility token. And then they deemed them as securities. And so since we were trading securities at that point, we kind of just put our hands up and said, hey, we're not going to, try and get compliant with this because it's going to take too long and too much capital. And then one of our competitors, Ether Delta, was actually fined by the SEC. And I think the founder did a few months of jail or something like that. So basically, we didn't think we were building anything illegal. And then all of a sudden it became obvious that we were. And so we just said, hey, we don't like cryptocurrencies that much. So let's try and sell this to an organization that has the correct regulations, that has the, proper approvals to launch this. So we pivoted the business. We ended up turning it into like a white labeled platform. So if you were a broker dealer and you wanted to launch your own cryptocurrency exchange, and we were building a security token exchange, then you could use our software and launch that. And so we started working with Bank to the Future, and then they saw the value in the platform. We just said, hey, you guys want to buy it? And that's how that one happened.
Hey, we'll get back to the conversation in a moment after a word from our sponsors.
Hey everyone, Eric here. At Turpentine, we're always looking for ways to streamline our work. That's why we use Notion for all our internal documents. It's been a game changer for us, and I want to tell you why. Notion is this amazing all-in-one workspace that combines your notes, docs, and projects. But what's really cool is their new Notion AI. It's like having multiple AI tools built right in. You can search, generate, analyze, and chat, all without leaving Notion. What sets Notion AI apart is how it personalizes responses based on your content. It's not just another generic chatbot, it understands the context of your work. Plus, it can search across thousands of docs in seconds, even connecting to tools like Slack and Google Docs. And get this, Notion is used by over half of the Fortune 500 companies. Teams using it send less emails, cancel more meetings, and save time searching for their work. It's designed to keep everyone on the same page while protecting your privacy. Want to give it a try? Head over to notion.com/upstreampod. That's all lowercase. Notion.com/upstreampod. You can try Notion for free, and when you use our link, you're supporting our show. Give the powerful, easy to use Notion AI a shot today at notion.com/upstreampod.
It's cool. And then last but not least, Spiff.
Spiff was cool. I liked working at Spiff. Backstory there. So I just sold Altcoin and, I was kind of burnt out on startups, if I'm being honest. That one was kind of rough. I had big plans for that. I just sold business apps, gone to that one and said, hey, let's go bigger. Didn't really work out. And so I started consulting. I started consulting for a few different startups and just taking Zoom calls and just giving advice. And I came across Spiff through a friend, and I had used their main competitor exactly at business apps with my sales team. And what Spiff does is they automate commissions for your sales team. So you log into a beautiful platform. When you close a deal, you can mark it, close one in Salesforce. It updates how much in commission you're going to make instantly. So you don't have to wait till the end of the month. It's awesome. When I first saw it, I remember telling the individual, his name was JP, he was head of product. I was like, you're building that? Like this enterprise, like sales commission thing? Because exactly is this 10, $15 billion company. They're a big behemoth, and they had built a very, very nice competing product. And so I basically just begged for a job. Just like, can I come do sales? Can I do marketing? Can I do anything at the startup? And then I joined that company when it was, 5, 6, like handful of people. They're based in Utah. Jaron Paul was the founder, CEO. And they basically brought me on. I figured out the initial sales motion to help them get their first handful of customers that weren't affiliated with, investors or referrals. Took off pretty quickly, helped them close their Series A investment. And then I ended up leaving to start MicroAcquire, which is now acquire.com. And then this year they sold to Salesforce for like $400 million.
Nice. Look at that. That's great. So then what's the thing that like leads you to go, I think that there's something missing in the market and get to acquire.com?
Yeah, I looked at the market and there was just no innovation with startup acquisitions. There was M&A advisors, there was business brokers, there was investment banks, but I felt like there was no platform that, put the founder in control where, sometimes when I was building business apps, I just, wanted to sell my company like that month. Probably not a good thing all the time, but, just like with Altcoin too, like I wish there was a platform where I can just, put my startup on there, instantly meet buyers, start building those relationships now, or if I wanted to sell that month. There was no tools that streamlined, things like the legal process, like letter of intents or asset purchase agreements or escrow and closing. And then also when, I was building the platform, I started falling in love with, different SaaS tools and companies and startups that you could buy on your own. So then we started innovating on due diligence. Like, how do I analyze the health of these, really interesting SaaS companies where instead of thinking of a new startup idea, you could eventually buy one and scale that business up. So I just, I really fell in love with the space and, the problem and just how many different ways we can take it.
So you put on the website, sell quickly, easily, and for the highest price. What are the things that you do to help sell for the highest price?
Definitely. Well, bringing a lot of buyers all at once, because to really maximize your exit, you want to create a competitive process. Again, if you have one buyer, you really don't have that much leverage. I love the quote, if you have one buyer, you have no buyer. Because if it falls through, I mean, the buyer can just say, hey, I don't want to pay this price anymore. Hey, I found an issue. We need to adjust these terms. So when you have a competitive process, that's when you're able to go to different buyers and say, hey, I have offer in hand at this price. Can you increase it to this? And I might be more interested. Or, I'd really like an all cash transaction. I don't want an earn out. Or can you do, XYZ with the terms, whatever it may be. So bringing a lot of buyers to the table is probably the main thing that we do to really increase, valuations, and also just helping with, trust and confidence when you're working with buyers. So are you prepared? You have, your profit and loss put together. Are you properly showing the financial health of your business? We also help with things like recasting financials to show, the true profit that, your business is generating. We'll put together something called a confidential information memorandum, which is a big fancy name for a pitch deck, but for buyers, what does your business do? How do you get customers? Like putting in the work up front to put all this together when you meet with buyers is huge because they have confidence. They're able to understand the business quickly. When they're able to understand the business quickly, they want to get on a call with you, and then they get excited about the opportunity. Then they start leaning in and, looking to make an offer. And then we try to corral a lot of these offers around the same time to create that competitive process. It's kind of similar to, when you're selling a house or something like that. You want your offers coming in the same week so we can go and, create this, small bidding war amongst buyers. And that ultimately will help you, maximize your exit.
So a lot of times when you are selling a house, for example, what you put, you'll paint the front, you'll stage it, you'll sort of get it nice. You'll create that emotional value. What's the ideal recommended, or what's your recommended sort of preparation process for founders who want to sell?
I mean, there's a few really easy things. You can go like above and beyond, but like as a bare minimum, I'd recommend having a clean financial statement. So a 36-month profit and loss statement broken out in Excel with all of your detailed expenses. Where's revenue coming from? What does churn look like? So buyers can really wrap their head around, how's this business performing? If they have to take more than a minute and they have to ask you 5 questions to figure that out, that's not good because you're just slowing down the process. And then when you do that, you're also showing buyers that you're not prepared. So you lose so much leverage because you can't really say, hey, like 2 other buyers are thinking about making offers, because there's no way that can be true. You haven't given me all the information. So the other buyers are probably asking the same thing. And so you're kind of shooting yourself in the foot. So we know what buyers are looking for and we know what they're going to ask. So we try to do a lot of this upfront. So one is the P&L, the confidential information memorandum. We call it SIM for short. That really helps buyers, again, wrap their head around not just the financial health of the business, but what does the business do? Have you had a price increase in the last 12 months? If so, how did customers react? How do you gather feedback from customers? All those basic questions that any serious buyer will want to know. But if we make it really hard for them to get those questions out of you, again, it's going to slow down, the whole process. So those are probably the 2 main ones. But then other ones like record a video of yourself and, hey, this is Sasha, and I'm selling my business. Here's why it's a good opportunity. Here's why I'm selling it. Here's, reasons not to buy it. Here's a few reasons to buy it. So you kind of break the ice and they want to, get to know you and meet you and get excited about, that initial call with you. Because when you buy a company, you're also really trusting the owner. So breaking that ice and getting them excited to meet you is also really important.
You said something interesting that I find potentially counterintuitive to some people, which you said is share some of the things that are going wrong with the business. I imagine sometimes there's things that are going more wrong than not, and some things that are. How do you pick the right amount to share?
That's a great question. Well, just assume buyers are going to find out literally everything. So again, you want to be trustworthy and you want to build confidence. There's a saying that we say internally, which is, bring your business to buyers with bruises and all. So like openly talk about, hey, churn is really high. It's going to take like an hour to figure that out. So you might as well tell buyers upfront and give the reason, like it's really high because XYZ, or we're doing these things to fix it. So the more that you can get ahead of these potential objections, just like in sales, you want to get ahead of objections before they're even brought up. Just like when you're selling a business, same concept. You want to get in front of those so you can position them or explain them in the best way or just in a reasonable way rather than a buyer finding them out and not even asking about them.
What percent of the companies that come to sell have all the stuff somewhat readily accessible, like their financials or a diligence report? Is it none? And that's part of the things that you do is you help them get there, or people come, fairly buttoned up?
Great question. I would say in terms of financials, I'd say that's the most common, Doc, because you can just download it from QuickBooks or something like that. I would say probably half of startups have that. I'd say maybe 10% have like a good P&L that's, what we'd say is presentable. So for 90% of founders, and I was the same way. I'm not a financial whiz. So maybe I had QuickBooks set up. I generally had, a controller that I would ask for this sort of stuff. So not very many. And then a sim and stuff like that, 0%, none. We'll get like one pagers or some random presentation, you made for investors, but it's totally different. It's helpful, but we like to go in more detail than that. So again, we're not slowing down the process. We're in fact speeding it up.
Yeah. And what do you see as sort of the average time it takes? I imagine there's some people like you mentioned before who are like, man, I'm done. Like you just someday the straw broke the camel's back and you're like, I got to sell this shit. Like I just got to get this done. But let's say you don't have anything. Like what's the average time it takes to actually put all this stuff together?
To put all this stuff together, I would say you could do it in a day. If you really wanted to spend like, I'd say in total. Well, with us, we do a sit down recording for the sim. So we just sit you down, record a Zoom call, and then we'll transcribe that, turn it into a beautiful presentation, and you're done. The recasting of the financials takes an hour. So not a lot of time. If you do it on your own, maybe longer, but we help with all that.
Yeah. All right. So we have some of the docs. You have your sim, you have your financials. There's potentially some other sort of analysis and supporting information. What happens next? Let's just say you have everything prepared. You know you want to sell. What do you do?
From there, we'd coach you on, how conversations are likely going to go with buyers, things to, expect. And then we're going to take you live on the marketplace. So that's where your listing is available. It's completely private. You can't tell what the company is. It's going to say things like, SaaS business with 1.5 million in annual recurring revenue, churn 4% and profitable. In the MarTech space with 10,000 customers, etc. Giving buyers like enough to get interested. Who are your competitors? What is your tech stack? So you have a general idea of what the business is. And it's private because you probably don't want your customers finding out. Maybe you have co-founders, maybe you have investors. So the way you get access to what we call, private details, which would be, your company name, all these documents I'm referring to, that stuff, you have to sign an NDA. And then once that is signed, you get to choose which buyers get access and which ones don't. So, and we can work with you on this as well. So we can go through, hey, these are all the buyers. This one's submitted a bunch of offers lately. I don't know about this person. But you can look at their LinkedIn profile. You can message them questions such as, how are you going to pay for this transaction? What got you interested about my business? Just in case you're, really sensitive about maybe certain buyers. So you can vet them a bit more and then give them access in your data room. And then from there, you have conversations.
How many of the purchases go to like people? I imagine some of the cases are there's some people who want to take over CEO. There's like they're not a founder, but they're an operator and they're like, I like this business. Some might be like a private equity, some might be venture capital, some might be a bigger firm who might be looking for an additional revenue stream, or they have distribution and you have a great product. What's the breakdown of stuff like this?
Yeah, it's going to depend on the business's size. Like typically for a real private equity firm, like ESW as an example, they won't look at anything with less than 5 million in revenue. So it needs to be 5 million. It needs to be big enough for them to spend the time, because for them, the difference between a $1 million deal and a $10 million deal is typically a zero at the end. I know it sounds kind of dumb and it's not, but for them, that's how they view it. So typical private equity is generally going to get interested at, let's call it, 5 to 10 million in revenue. Some private equity firms, not even 50 million. So it just depends. And then below that, I would say we have a good mix of what we call micro private equity firms at like 1 and 3 million in revenue. And then below that, we'll typically see a lot of high net worth individual buyers. So these are executives at different tech companies. These are exited founders. These are angel investors. I think it's probably my favorite segment of buyers because I see a lot of just awesome transactions where people have a startup that's doing really well. It's extremely profitable. They've taken it as far as they can go with it and they want to sell the business, and they do so over to someone that, wants to run this awesome, profitable business, and they're going to breathe some new life into it. Sometimes, the founders that we work with, they're burnt out and they just want to sell the business, take a break. And then we have individual buyers for that too. But it again, it depends. Sometimes we'll also see strategics, but that would be our smallest bucket. Depends on just the type of company. But if I had to put percentages, I'd say around 70% is high net worth buyer, 20% is private equity, and then 10% strategic.
That's awesome. So now some of the fun stuff. I want to go into some stories because just as a founder, it's just so fun to see people build something and people sell something. It's fun. So like, I don't know, let's dive in. What are some of the smallest deals? What are some of the biggest deals? What are some of your favorite deals that have stood out over the past couple of years?
Yeah, there's a lot. So we've done over 1,000 transactions. So sometimes it's hard to pick a favorite. But a few top of my head, there was a transaction for this company called Median. It was like an in-browser customer support tool where I could take over your screen. So you're like, hey, Andrew, I have this issue with your web app. Can you get in here and fix it? I'd be like, oh yeah, just click this button. They sold some pretty high-end or high contract value licenses to some public companies. There's a YC company, and they just lost interest. And they had a new startup idea. They wanted to work on it, but they were stuck with this business. They thought it wasn't that great. I thought it was awesome. Took it live in the marketplace. They had like 10 different offers from a ton of different people. They saw these high value contracts and thought, hey, we can go get 5 more of these. There's, something here. So they sold the business really fast. The buyer was super happy. He's gone off to take the business much farther than the founders did. Not from skill or experience. He just had, more energy and more motivation to grow it. And the 2 founders, they went off and started a company called Workshop that has, 150 employees now. They're doing tens of millions in revenue. So they went and said, hey, we want to build something big. We need to sell this. And they did. And then the buyer was like, hey, I just want like a interesting small software company. And that's what he was able to get. So that's one fun story. And we have so many like that, so many that are similar along the lines of that. Another one off the top of my head would be, there was this individual, Damon Chen. He bought a small AI PDF reading app. It was like $5,000 or something like that, or let's call it like 25. Something, pretty nominal, not a huge acquisition, but an interesting SaaS tool. We have a ton of products like that as well. It's just individual engineers building interesting SaaS apps, and they'll list them to see if anyone else wants to buy it, go get customers. So Damon buys this small PDF app, and he buys this domain pdf.ai, does some marketing and some branding, and he's done a couple million in revenue with this, small app. So that one's kind of cool. Yeah. And then recently, actually last month, one of my main competitors, a company called BuildFire, it was my main competitor when I was running business apps. We were a mobile app building platform for small businesses. And he came to me and he said, hey, Andrew, I want to sell too. Like, can you introduce me to the buyers that you worked with? And I was able to, and then a couple more. So he was able to have a fairly competitive process. So that was a fun transaction. He closed also, 30 days. He's working on a brand new e-commerce company called Laundry Sauce, which is, taking off. He's already doing 8 figures in revenue. I could keep going and going. We have so many stories like that.
They're fun. Can you talk about what's the biggest transaction on your platform?
The biggest transaction, the biggest one was probably like $10 million. That went to a private equity firm, but we've done a handful of those, but our sweet spot is within the 1 to 5 million range. That's where we see a lot of activity. And then once we start to move up from that, that's when, we'll typically bump into investment banks and M&A advisors. So our sweet spot is right in that 1 to 5 range.
That's awesome. So what's next for acquire.com?
Well, we've been focusing a lot on just SaaS businesses, but we have already expanded to helping agencies get acquired. Also going to start looking at e-commerce businesses as well. I think over time, we're looking to, help any sort of, profitable online business, whether that's a software company, service business, or a physical good company like an e-commerce brand, help them find buyers and help them get acquired.
And what motivates you? What keeps you going on this?
I love entrepreneurship. I love entrepreneurs. I call them a group of crazies. Like, you're selling a business because it's too hard to work on. And then they turn around and put offers on other companies on Acquire while you're in due diligence, which we actually do see happen. So I just love entrepreneurship. I love, seeing entrepreneurs succeed. And I think having a company that helps startups in any way is pretty awesome and motivating for me.
Cool. And how do people find you generally?
Andrew Gazdecki on LinkedIn or Twitter. It's probably the easiest. Just Andrew@acquire.com. If you have any questions, you're looking to sell a SaaS business, Andrew@acquire, and be happy to help out.
Awesome. This is great. Well, Andrew, thank you so much for coming on the show. This was super interesting. And for all of you SaaS founders out there, it's acquire.com. You know where to find it. Get at it. Go build those things. Sell it and go build something else. Any final words?
That was fun, man. Thanks for having me on.
Thanks for tuning in to Turpentine Finance. Share it with your executive team, direct reports, friends, and family. And if you want to support the show, the best ways are to leave a review wherever you're listening and subscribe. Turpentine Finance is part of Turpentine, the podcast network behind Moment of Zen, Turpentine VC, Age of Miracles, and more. Shows for experts by experts in tech.